It has been a while. Let's talk. Let's talk. Grayscale, BlackRock, Bitcoin Spot ETF, 21 million hard cap, ordinals, drive chains. Let's look at some charts. Recession, no recession, and maybe even some price predictions at the end. Cool. Let's dive in. Let's start with Grayscale. So the too long didn't read is basically Grayscale won their court case against the SEC, and the 3 judges that ruled on that case basically told the SEC, you have no clue what you're talking about, and you have no clue what you're doing, and the arguments that you made are completely invalid. So from the day of the court case, I think it was 1 September, not sure, 45 days later they need to make a decision. Currently, there are talks behind the scenes. So Grayscale is basically sending a guy to the SEC where they have behind the curtains discussions regarding an approval. Does it mean that there will be a Bitcoin Spot ETF within the next 45 days? Probably not. There is a chance though. The Bloomberg analysts, they think the most likely timeline is between October this year and March next year. And I fully agree on that, because the thing that you need to imagine is if they are going to approve such an ETF, and we are talking here BlackRock, Fidelity, Bitwise, Invesco, like all the biggest asset managers in the world. Why do they want to get into this asset class? Because there is demand. And you can right now you don't really see that on chain, and you don't on chain, and you don't see that reflected in price. Why? Because a lot of people, a lot of institutions are waiting for an ETF. They need a regulatory vehicle. They need a pension fund. Right now they cannot invest in Bitcoin. They will be able to invest with a spot ETF. So all of these asset managers, they have sales forces, people that are going to call up accredited investors and going to tell them you need to buy this ETF. And they need time. And guess what? We have a halvening next year in April. What better thing to sell them on than the halvening that, if it really has a price impact or not, doesn't matter. Historically, it was a great thing to sell. A lot of people believe in it, and it is the most amazing thing if you're a salesperson and you can call up a pension fund or an accredited investor and you can tell them, hey, look, in April there is this halvening, you need to get in now. And that's what they want. They are in bed with the regulators. These are the biggest asset managers on the planet. So you will see a lot of FUD online. And crypto people, they are crazy. They're crazy because they think everybody can make 1000x, everybody can make 100x. Which is of course impossible. Very little people do. And they're crazy because they see FUD everywhere. They think everything is about control, and they're like the full-on conspiracy theories. Why do these people want to get into Bitcoin? 2 reasons. There is demand. Their clients are asking them to do so. And secondly, they want to make money. How do they make money? With fees. So they want to grow this thing to be as big as possible, and they want to ask fees from that. I think Grayscale currently does 17 billion in fees a year with just the Bitcoin that they hold. So there's a huge market for that. There is and there is demand. So let's go into a few other things. 21 million cap. Oh my god. Wait, give me 1 second. I'm just gonna look for something. So, this guy is a core developer. Not really a core developer. He had like 1 pull request, I think. And he said how to drop the 21 million cap. And this kind of got picked up by a lot of people because of 2 things. It's a stupid idea. And it was... he even says here that... he wasn't serious about it. And I think Peter Todd came up with the initial idea, or he kind of raised that issue. Why do people want to drop the 21 million cap? 2 things. So they don't understand the basics of Bitcoin, and they're Keynesian, so they don't understand Austrian economics. There is, if you want to have an inflated coin, it is just the same as fiat. Of course, you can keep the inflation in check, but why would you? Bitcoin is different because it is hard capped at 21 million. If you are struggling with understanding these concepts, read Jeff Booth, The Price of Tomorrow, or read The Principle of Economics, The Bitcoin Standard. There are plenty of books out there to kind of raise your level of understanding when it comes to these things. Let's just play through the scenario. That firstly, okay, maybe we need to understand why would the people say that we need to increase the 21 million cap. So what they are bringing forward as an argument is as the so-called security budget, because miners need to make money with mining Bitcoin. With the halving, they decrease every 4 years. So at one point, there is not going to be enough Bitcoin to subsidize the miners. That's basically the bigger theory about this. First of all, this is not going to be an issue for the next 10 years. For the next 3 halvings, this is not an issue. Second of all, the people that make these arguments, they miss out on 2 things. The first thing is Bitcoin price increased at least 2x every halving. If it continues to do so, this whole argument of security budget is not a valid argument. Then the second variable in this equation is we have something that are transaction fees, block fees, people making transactions and attaching a fee to them, and miners can earn it. We already have a proven concept, I think earlier this year, where a block had more transaction fees than mining subsidies. Meaning, if there is enough demand for block space, if there are enough transactions, we don't need subsidies. We can live off of fees. That's enough. So there's 2 variables. Firstly, the timeline is important. This is not an issue right now. This is maybe going to be an issue in 10 to 15 years. So that's the first thing you need to understand. Then the second thing is the people that are making these predictions and basically spreading FUD on this right now, they are just assuming the 2 variables. Bitcoin is not going to increase in price and the transaction fees are not going to increase. So they are basically telling you these 2 things will not change. How can they know? Until now, we saw a clear increase in both transactions. Okay, so the on-chain transactions, the blocks are not fully used right now, but we are also not really, if adoption continues as it is right now, and we see a lot of financial institutions FOMOing into this, we have a lot of building that is happening, we want to onboard people to Lightning, so there needs to be a lot of on-chain transactions. These 2 arguments, if they are invalidated, sure, then we can have this discussion in 10 years or in 15 years when it's actually a problem. But assuming that we need to drop the 21 million cap because of this right now is just bonkers to me. It's, engagement farming, or at least a very, very weak argument. Because it depends on 2 variables that you kind of don't know how they play out. And if we don't see a price increase and adoption over the course of 10 to 15 years, I don't know how great Bitcoin is doing. So just keep these 2 things in mind. And then the other thing on top of that, let's just assume there will be a hard fork and you will have 2 versions of Bitcoin. One is going to be an inflated one with tail emissions, that the 21 million cap is dropped and your supply, your asset is going to be inflated, and the other one is going to keep Bitcoin as the hard money as it is. What kind of asset do you want to hold in that case? Because in a hard fork, you get 2 coins and you need to decide. Do you sell? Do you hold both? What do? Do you convert one into the other? Me personally, I'm going to hold the one that is not going to be inflated. I'm going to hold the hard money. And let the other people, if you want to have tail emissions, if you want to inflate your own stack, go with the other one. We had these kind of situations before in 2017 with the block size war. If you don't know what happened then, I'm strongly recommending reading the block size war. Great book, 2017. And there as well, we had the miners and the whole industry colluding and basically telling us we cannot, they want to have bigger blocks, and the node runners basically told them, no, sorry, it's not going to happen. And look where we are right now. Look where every Bitcoin fork that ever happened is right now. Look at BSV, look at Bitcoin Cash, look at Bitcoin Gold. Look, this is BSV. Do you want to hold this? This is Bitcoin Cash. You want to hold that? So, keep it's mostly just engagement farming and FUD. These are things we currently don't need to worry about. Then the other thing is these arguments, they're like a double standard, because, so let's talk ordinals. Ordinals are currently, they make up a big part of Bitcoin transactions. So you can see here the mints that are happening. And with these mints, people need to pay for transaction fees. And we already saw a block where transaction fees were bigger than the mining subsidies. So you cannot have it both ways. If you think that this is going to increase Bitcoin's utility and this will bring transaction fees to subsidize miners, great. But let's just keep one thing in mind. We saw a big spike of Bitcoin ordinals during May this year. So monthly transaction volume, 450 million. Decent. We definitely saw a big interest here, but this is down to 3 million, just the volume. And it's similar to NFTs. These things come and go in waves. Do I think ordinals add some utility, add some benefits to Bitcoin? Yes, they do. But it's not something I'm interested. I'm not interested in monkey pictures on the blockchain. I wasn't interested in NFTs. I'm not really interested in the pictures that you can do on Bitcoin right now. Look, there are some things that I personally would use. You can engrave the name of your wedding day and your partner's name, or the birth of your child, something that you want to be on the chain forever, engraved into a block. I can see 3D printed gun plans, forbidden books stored as data on the Bitcoin blockchain. That's fine. But I don't see value in monkey pictures. Maybe this is going to head into another direction and it's going to be interesting at one point, maybe. But it's a free market. If you want to pay a heavy fee to engrave something on Bitcoin, feel free to do so. You're paying the miners. Good for you. So that's my approximate thoughts on ordinals. And as you can see, there are a lot of people currently engraving and minting things. The only thing that is not happening is you don't really have people that are buying this stuff. So yeah, with that said, let's shortly drive chains. Okay. Bitcoin what is Bitcoin? That a lot of people don't really understand the importance of the issue that Bitcoin is solving. So they will say, okay, Bitcoin has no utility. Really? I would urge you to check your financial privilege, because Bitcoin is uncensorable, it is unconfiscatable, it is open public money for everyone, it doesn't discriminate, and it's a great protection against inflation. If you live in the US and you suffer from 9% inflation, okay, then it's probably not the best inflation hedge you can have. Maybe you should look into gold. But if you live in a country like Venezuela or Argentina, Zimbabwe or Turkey, where you have 40, 50, 60% inflation a year, it is definitely a great inflation hedge. And in these countries, they are chokeholding financial on and off ramps. So you will struggle to buy financial assets like stocks and gold and so on. But you can buy Bitcoin. And this is exactly why you should check your financial privilege if you think Bitcoin has no utility. It's solving the biggest issue out there. Money, weak money, fiat money is probably the biggest problem that we have right now. So yeah, I would urge you to look into that. Maybe, go back to the basics. Read the Bitcoin Standard, read Hayek or Mizik or Principle of Economics, Price of Tomorrow, a book that teaches you the basic about what's wrong with the fiat system, with Keynesian economics and so on. So utility, definitely there. 21 million cap, not an issue. What else do we need to talk about? Drive chains. Because Bitcoin solves money and we should touch it as little as possible. We should not try to break it in any way. If we want to bring something that has utility, or you think that has utility, test it first. Test it on another chain and leave it. We don't need drive chains right now. Maybe we need them in 10 years. But before that, we can test it. So change as little as possible, break as little as possible. Bitcoin just needs to survive to do its thing. And its core, at its deep core, Bitcoin is just money, and it's fine if nothing ever changes to its core protocol to the layer 1. Bitcoin is doing just fine. We can scale it on layer 2s, on layer 3s, as we did with other protocols, as the internet scaled with Ethernet, with TCP/IP, with HTTPS, and so on. You can scale it around like an onion, like a network actually works. So that's my thoughts on drive chain. Sounds like a nice idea. Do we need it right now? Definitely not. Do we need to test it? Yes. Is this something that we can implement in 10 years? Maybe. But right now it's not worth the risk because it adds complexity and it changes minor incentives. So my opinion, just let things play out. Don't focus too much on that. So now let's look at some charts before we are going to finish that off. Bitcoin, where is it going? What's happening? I'm going to show you the weekly. So my personal opinion, Bitcoin ETF, it's not a question of if it's going to come. It's a question of when it's going to come. And I think we are looking at somewhere of December until January, February, March timeline, which would put it somewhere like around here. I can see Bitcoin correcting down to 23K. That sounds pretty reasonable to me, but we're going to see a bullish 2024 and a bullish 2025, even if we see a recession. And I think we're going to see a recession. A lot of altcoins are probably going to correct a bit because Bitcoin dominance still probably needs to go up at least into the 55s, maybe into the 60% area. You can see it found support here, and it's probably gonna keep increasing until the end of the year. Then altcoins are going to bottom out, and probably Bitcoin dominance is decreasing again when we go into alt season. That is most likely happening until the end of 2024. Just look at how it played out last cycle. Dollar, bullish on the dollar. I want to show you two charts that are interesting because look at this. This is gold, and I'm very, very bullish on gold. It's probably going to break out into the 2000 areas soon-ish, especially if we see a recession. But look at what gold did when it got its ETF in 2002 and 2003. It went basically from a price of 300 to a price of 2000. And Bitcoin is going to do something very, very similar because a lot of slow money is going to be moving in. BlackRock knows why they're doing a Bitcoin ETF. So this is a period of 7 to 8 years, by the way, complete insane bull run in gold over a period of 7 years. By the way, into a recession. This is the recession. The great financial crisis is this small bit here. Of course, it did correct because of liquidity, but it was just a little bit of a dip in between and then a run up later. And now let me show you one thing. This is the chart S&P compared to gold, divided by gold. And if you bought gold between the 60s and 70 area here, somewhere around here, you did exactly the same as the S&P 500. A lot of people don't know. They think gold is going to underperform and gold is not a great asset to hold. It depends when you bought it. And if you if you buy it here, gold is outperforming, but here it is basically the same value as it had with. Now I'm confusing stuff. My God. If you're buying gold here, you're doing great. And here is probably the areas where you need to sell it. So the same is true here. Gold is undervalued, S&P is overvalued compared to gold. We are at the same areas here, and we weren't able to break the dot-com bubble. Pretty crazy. But let me show you an even greater chart. So look at this. This is crazy. This is the S&P divided by total money supply, M2. And we were not able to make new highs since the dot-com bubble. Absolutely crazy. Look at this. Great financial crisis. COVID. This was before COVID. And this was 2021 top. Look at where we are right now. Exactly at the same level. What do you think is going to happen next? Look, maybe it's just me, but I don't believe that this is going to go upwards. No, we're going to correct. There is very likely a recession in stocks. This is just my opinion. I'm currently heavy into gold, heavy into Bitcoin, heavy into cash. I will move my assets into stocks when I see the recession playing out and you can get a little bit more of a discounted price. But, just pick any stock that you want to buy this. Apple, you want to buy at an all-time high here? Like, let's do Amazon. You really want to buy this right now? You want a dollar cost averaging to an all-time high? I don't know. There are probably some opportunities in China, like Alibaba or the China index or so on. There are stocks that corrected a bit more, but like just to show Microsoft, you really want to buy this, after an up only area, completely overvalued. Look, maybe if you want to buy this, sure, be my guest. Same here, Tesla. This is just complete insanity. And if we are going to a recession, these stocks are gonna correct the most. If it's not gonna correct, okay, I don't have my entry. It's not. I'm not gonna be sad about that, but I'm also not gonna be buying at these prices because the upside is very, very limited. Okay. Then maybe for all the people that think, okay, Bitcoin is going to outperform Ethereum, just keep note that 18 and 19 bear market periods is usually when Ethereum is losing out the most. So I'm expecting Ethereum to go lower here, maybe in the US dollar terms, even go on beneath the thousands. And for many, many altcoins, it's going to be the same. Altcoins are very, very likely to lose until a few months after the halving. So right now it's still Bitcoin season. We're still in a bear market. Bitcoin is still going to outperform as it did. You can look at any pair. This Cardano, whatever pair you want to look at. And I think there's a bit more downside to come, but at the end of this year probably, or the beginning of next year, summer of next year, in the next 9 to 10 months, it could be very, very interesting to look into these assets as a trade. Cool. So I rambled on for, I don't know, 20 minutes, 25 minutes. I don't know. I don't even know how long this was. Let me know if you enjoyed me rambling on basically, I don't know, all the topics that I did. Let me know your opinion on drive chains, on ordinals, on 21 million cap, on are we going to go into a recession? And of course, give this video a like. It means a lot to me. It's for free. Just takes a second of your time. Share this video with anyone who might be interested in this. And thanks for listening. If you really made it until the end, you're the man. Thanks, and I see you next time.